The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
Well, looks like a lot of the market commentators out there are pretty convinced we're seeing a QE rally today. Who knows? You know, the sentiment changes day to day, and as we've talked about with some of the guests on the show here over the last few months, you just never really know what to necessarily attribute a rally or a downturn to. There's always got to be a reason, doesn't there? And I was watching the news a little while ago. Sounds like Angela Merkel is out there saying that Germany is ready to help, but then she was also making a few comments aimed at the U.S., at Japan, about to the U.S., about getting our own debt problem solved. And, of course, we have the politicians that we elected here in this country. I saw I heard a quote this morning. This is funny. The Treasury Secretary, Geithner, said, quote, Europe will have to do, and here's the quote, a bunch more to fix their problems. So that must be a technical term. I'll have to go back to my finance class textbooks, review the definition of a bunch more, what that means in financial terms. All right, so, don't want to spend too much time on the politicians. I like to begin my day, actually, spend my entire day in a more optimistic zone. It's better for my mental health not to think too much about the bunch, to use Geithner's term, the bunch that we elect in this country. Okay, let's see here. A couple interesting things. I'm doing some work for Morningstar, and I do talk about that sometimes on the show. I had a great assignment I got from them. A lot of fun. I got to interview one of the preeminent small cap fund managers, Robert Gardner, who was at Wasatch for years, based out in Salt Lake City, the Wasatch Mountains. And if you've never been out there to Utah to see them, it's gorgeous out there. Take a trip. It's worth it. Believe me. Beautiful, beautiful place. But I digress. I had a great phone conversation. I didn't get to go up there this time with Robert Gardner, who was founded a couple of the small cap funds over at Wasatch back in the 90s. And he recently left there after many years, and he's only 47 years old. But the interesting thing is, this is funny. He joined Wasatch when he was 16. When he was in high school. He was a part-time employee after school. He worked in the back office, and this was back in the early 80s, before things were computerized, of course, to the degree that they are today. He had a funny story about at the close of the trading day, he would go downstairs. There was one of the wirehouse offices. He thought maybe it was E.F. Hutton, was downstairs in the same building the Wasatch Fund was located in. And they would go downstairs and use their terminal to check the closing prices for the day of their holdings. Now, can you even imagine this? This was maybe 1981, 1982. Just imagine. That's just incredible what people were having to deal with back then, and what even we as individual investors and traders take for granted today. So anyway, Robert was talking about some of the fundamental screens he uses at his Grander Peak fund. And by the way, I am going to ask either Robert or his co-manager Blake Walker if one or both of them can come on the show. It would be a fascinating discussion with either of those guys. They're very disciplined about the methodology, and this is something I talk about here a lot on the Small Cap Show. is the fact that individual traders can very easily follow in the footsteps of these guys, and this is a guy to watch. Now, they are not technical traders in the same sense that many of us here are. They are looking at the fundamentals. Robert was talking about some of the metrics that he's looking for, return on assets. He is looking at earnings growth. He also screens for fallen angels. In other words, growth companies that have perhaps missed a quarter or just going through a tough time, but do appear that they could be well positioned to turn things around. So that's another area that he screens for. Now, another interesting thing, and just to kind of let you know, he was also talking about some of the growth potential internationally, and this is very relevant to what we talk about here on the Small Cap Show and in the newsletter, Low Price Leaders. That if you're not familiar with that, if you're new to the show, check out the homepage, tfnn.com. It is still being offered at the introductory rate. Terrific time to be checking this out, just because right now, with our market volatility having returned, we are still in a confirmed market downtrend. We're looking for a significant price gain across the indexes, or at least on one of the major indexes, in heavy volume. Have not seen enough of a price gain yet, and as we've seen, we're in an environment where it's all too easy to retrace those gains, reversing back to the downside again. So, in any case, what all of that means for small cap traders, obviously a lot more volatility. You can see a stock that will correct at a much greater rate than the general market. But the flip side of that is, if you're in a market trending higher, what you want to capture are those outsized gains. In other words, these growth names, these smaller caps, can show price gains that outpace the general market. Okay, so, and of course, there are ways to capture both the upside and the downside, but as I noted on Tuesday, and my outlook remains the same, we are in a confirmed downtrend, but we're in kind of a no man's land portion of the confirmed downtrend. So, in other words, with this volatility, it's really, really challenging at this time to try and outsmart the market, to be trading for either gains to the downside, in other words, on the short side, or the long side. You know, I'm fine with that. I know a lot of traders. It's just, you know, you get those itchy fingers and you want to be trading, but just a lot of times it drives you nuts. I'm going to talk about that just a little bit more in just a second. But I want to just finish up on a little bit more on what Robert Gardner was saying that I thought was pretty interesting. He was talking about the growth potential internationally, how you might, as a fund manager, and this is not for us as individuals, we do not have to sit through this. Don't forget, these funds have a mandate that they do need to be fully invested or almost fully invested. Not at all what we have to do. So he was talking about how you really have to be prepared as a fund manager or a holder of a mutual fund to experience the volatility of a stock that might tumble 50%, but you might have some of these others that rise tenfold just because the growth potential is so high. He's more bullish right now on the international space than the U.S., though he does have what's called a global small cap fund that does include U.S. as well as international. So, in any case, just a few interesting observations, and wouldn't it be great to have him on the show? I am going to reach out to him about that. I hope we can work something out. Terrific guy, very down to earth. Fascinating that just some of the most accomplished people, some of the best investors, very often are very down to earth and humble. And really, really enjoyed meeting him. Would like to bring him on the show. Have all of you get the chance to hear from him as well. Okay, I wanted to talk just a little bit here. We've got a few minutes about some of these trades that can really make you crazy if you're out there just trying to kind of game this market in one direction or the other. And I know for a lot of people, now that everybody's carrying around their smartphones, I think that's more of an excuse that people could say, yeah, I can be trading the market all day long. Now, I'm looking at, I put up a chart there for something called OCZ Technology Group. And as you may know, we do have the Low Price Leaders newsletter here. I talked about it a few moments ago. And in there, I'm looking at stocks that are trading between $5 and $12. That can be a terrific springboard for further gains in a bull market. In this particular market, like everything, it's challenging. And as I mentioned, these smaller stocks, they can be more volatile. They can show declines greater than the general indexes. And particularly if you do have one of these smaller names, let's see. So OCZ, this is OCZ Technology Group. It's from the semiconductor sector, trading right now at about $5.23. So this actually does have a pretty good amount of liquidity. It's a recent IPO. It's not something I would dismiss out of hand. It's actually expected to become profitable this year and expected to show a triple-digit earnings gain in 2013. So there is some potential here. I just think I read a comment on a Facebook group that I'm part of this morning, just kind of in passing. I looked at this. It's a trading group, and somebody wrote, OCZ testing my patience to its limits. Well, yeah, of course. Of course, this market is going to do that. I mean, right now, this does have quite a bit of liquidity here, 2.3 million shares traded a day on average. So obviously there is some institutional interest in this particular one, and I can understand it from a fundamental perspective. The revenue growth has been strong, and as I mentioned, the earnings, it's expected to become profitable this year after a few years of losses. But, nonetheless, I'm just kind of looking at this chart. I've been warning for a long time now about how these volatile, uncertain market conditions, with a market that's incredibly news-driven, just how difficult this really is to latch on to any sort of trend whatsoever. Now, you do see, I guess it was maybe last week or the week before, you were able to latch on to an upside trend in this particular stock. I'm actually, I don't have the news in front of me as to whether or not they reported earnings, whether there was something going on. Let's see, let me pull that up here on one of my other screens. It actually doesn't matter. The whole idea of what happened, it actually really doesn't matter. You can look at the chart and you can see what's going on. Right now, if I had been able to take advantage of this uptrend here, I think I would have taken some profits in this one. It's just all too common. When I saw that comment on Facebook this morning, I just thought, this is just too crazy of a market, and almost everything is going to try your patience these days. Okay, we're going to a break right now. I'll be right back with more of the Small Cap Roundup after these messages.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pezzavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, I left the, welcome back. I'm Kate Stalter. This is the Small Cap Roundup. Just, let's see, we're a few minutes away from the European close here, so I'll see if, after the next break, we'll check that out, see if the indexes show any move based on that. Does tend to happen every once in a while. Okay. So I left the chart of OCZ up there just for 1 second, just because, you know, based on the, I was talking before the break about small cap fund manager over at Grandeur Peak, Robert Gardner, and some of the fundamental screens that he and the small cap, actually any market cap fund manager will be running the fundamentals that they are looking for. And, you know, if you were to do a fundamental screen of OCZ, just take a look at that, you will see that the earnings are supposed to turn around. So could this one have quite a bit of potential ahead? Absolutely. Just according to the way I trade, and believe me, over the years, like most of us, I had to learn this the hard way. I know a lot of people don't really like to talk about their trading lessons, their trading mistakes, but a lot do. And I think it's more valuable when you do share with people what the mistakes have been. And, you know, I think everybody tries to kind of invent their own little systems for doing things. Sometimes you find something that works, And sometimes it's just a little bit of trial and error, adapting existing systems to your own risk tolerance, temperament, time available to trade, so on and so forth. And this is something that in a market condition such as what we're in right now, I would prefer to wait on a stock like OCZ and give it a little bit more chance to prove itself. It is right now just way too far off of those 52-week highs, way too much overhead right there. Okay, let me move on. I want to show you another small cap that's moving up today, and this is something called Team, and the ticker is TISI, and this company provides construction services for industrial and commercial clients, some temperature management systems. It's definitely, I laugh a lot about these companies that are not anywhere sort of in the hipster zone, that you're not going to hear too much about in the media the way you might as, the IPO of, say, Facebook. But you're not going to hear too much about this one. Now, it has been consolidating here. I've got it up there for you on a daily chart. And it was, let's see how it's doing today. Was making a little bit of a move up earlier. It got kind of flat right now. It got an upgrade earlier in the week. And that's another thing. You do often see some institutional trade based on these upgrades. And it's kind of funny to me how some of the financial media presents these analyst upgrades and analyst research as it's something that's appropriate for the retail investor. That research is aimed at institutional clients. And as I noted earlier in the discussion about grander peak funds, they're looking at a very different investing time frame, very different mandate for how much they need to be invested and through what market conditions. So it is pretty interesting, but nonetheless, you do see often a short-lived move in one direction or the other based on some kind of analyst action. Now, let's see here. Team is, fundamentally it's pretty good, but again, this is an example of why you don't want to be making your trades based on the fundamentals, because as you see right there, I've put this up on Tiger TV, this thing has been struggling since, that would be back in March of this year. So, you could argue with the chart, and you could continue saying, hey, well, let's see, you've got a PE right here of 19. You've got earnings growth in the double digits. You've got estimates, more double-digit estimates expected in 2012, 2013. You've got double-digit revenue growth in the past year or so. So, you could argue with it, but look at what the chart is telling you. So why would you leave your money parked in this thing? When you obviously would have had losses if you had held on to this since March. Much better to either be trying to capitalize on the downside somehow, or nothing wrong with sitting this one out in cash. All right, I will be right back with more of today's Small Cap Roundup in just a few minutes.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right, welcome back. This is the Small Cap Roundup. I'm your host, Kate Stalter. Okay, we do have the European close. Looks like no, we're not seeing the U.S. indexes really doing much based on that. Pretty much holding on to where they were. As as I mentioned earlier in the show. A lot of people out there attributing today's U.S. market rally to the disappointing jobs data, which yields to hope for more money printing. Who knows? It's really just day to day, and of course you've got the Greek elections ahead of us coming up this weekend, and you just never know what news item is going to send the markets one way or another. Right now, we are still in this definite time frame of uncertainty. Definite uncertainty. Can you say that? I love the phrase definite maybe. Kind of reminds me of that a little bit. Okay, let me give out the phone number, 877-927-6648. So, we've got some of this slow, disappointing job growth here, but nonetheless, the retail sector has been one of the leaders lately. And let's just face it, we love our stuff. People love their stuff. You know, where do you think all Apple sales are coming from? It's not coming from business, for the most part. It's coming from consumers wanting goodies, wanting the latest technology, the latest cool stuff from Apple. And there's a lot of other examples of that. I mean, you know, some of these clothing retailers have done very well. So I put up a chart there, and this is actually, it's kind of a retail name, kind of, sort of. It's actually a business-to-business company, but I wanted to look at this first, and then we can take a look at some consumer plays from the small cap and perhaps maybe mid cap, but mostly small cap universe today. I wanted to take a look at. This is LQDT Liquidity Services, and as you may know, if you have been subscribing to the Low Price Leaders newsletter, which also features small caps, stocks with a market cap below $2 billion is where I'm looking at as an entry point. This is one I've been tracking for quite some time. I've got it up there on a weekly chart for you right now. That is a beautiful chart. Just look at that nice kind of sideways little action here, well above key moving averages. I'm going to put this up for you on a daily chart on Tiger TV, and taking a look here, holding up very nicely at its 50-day moving average. So, you know, and you can see, let me go back here to a weekly chart right there so you can see. It gives you a very different perspective, both of which are valuable. Okay, so you can get sort of the 30,000 foot view, or maybe the 20,000 foot view. I guess maybe a monthly. I don't necessarily find the monthly charts, to be honest with you. I don't find them that valuable. Other than the only thing I use them for, and I use them quite a bit for this actually, is just to see where the stock has been in terms of its uptrend. In other words, has it gotten strong institutional support as it's trended higher in the past few months? Is it perhaps ready for a pullback just because that monthly rally over the past several months has been too strong and maybe the buying has been exhausted for the moment? So let me go back here, put this on a daily chart. Okay, great support right there at the 50-day line. So this is a company, it's they do online auction services, wholesale, salvage goods, definitely not an eBay kind of thing. It's a business to business, not aimed at consumers. And this, you really can just see this beautiful trajectory right up here, holding above that 50-day line. That's just a terrific indication of institutional confidence among the small cap managers of the world who are holding this particular name. You have seen some, the institutions have become more and more aware of this, obviously, as it's moved up. Now, one of the things, of course, and I've talked about this in the past, is that historically you've seen companies eventually pull back to a lower low. So in other words, you eventually see them after they've run up for a while. This is kind of what I was talking about looking at a monthly chart a moment ago. You see them after a sustained run up, they will pull back, undercut the prior consolidation. That is often, almost counterintuitively, that is a bullish setup in many cases, because it really does just kind of set the refresh button for more money to come in, some of the value shoppers. And yes, it is true, these institutional investors, they are looking to get in at the lowest point, not necessarily looking for the same degree of technical strength as proof to get in that often behooves the individual trader. So in any case, the market really has been rewarding some of these companies lately that just continue to rally higher. The market has been rewarding winners. Price gains beget more price gains. A lot of traders believe that the quantitative easing over the last few years had something to do with it. Maybe. That might be more the case, perhaps in some of the larger cap names. that all of the institutional owners and advisors like to get their clients into. In other words, something indexed to the S&P 500, the Russell 1000 large cap index. You might see that more in those cases. But nonetheless, even in the small cap arena, you have seen winners rewarded, and that does remain the case with something like LQDT, Liquidity Services. Okay, let's move on and just take a look at a couple other small cap names from the retail sector. I want to show you one. This is actually a restaurant. I've written about this a little bit. This is something called Kona Grill. Kona, based in Arizona, not Hawaii, despite the name. And now this is a small company. Let's see here. This is a very small company, in fact. Market cap less than 100 million. Very tiny. Moves about 90,000 or so shares a day on average. But, again, this is, let me put this on a weekly chart so you get a little bit of perspective here. It is thinly traded. You'd have to use an overabundance of caution with a stock like this. And you just take a look at, you see kind of it's gotten support, bounced off that 50-day line a few times, rallied to some new highs. Definitely cleared this resistance. It was hitting some resistance right around just below $8. So it did rally above that. Now, this is not one that I've been officially tracking, but it is kind of doing some things here technically that is leaping to my attention right now. You're seeing some double-digit earnings growth expected, 61% earnings growth expected this year to 50 cents per share. That's expected to rise again in 2013 to 57 cents a share, as I frequently say. That is not, you don't use those estimates as a way of making your buy and sell decisions. That's always going to be based upon the chart. A couple ways I do that, either based upon perhaps a chart formation or based upon where the stock is relative to shorter term and medium term moving averages. And I can assure you all those methods are going to come into play once we do get to a new market rally. Now, there are an abundance of names setting up right now. Kona Grill is one I like, pulling back a little bit today from that high that it reached in yesterday's session. A lot of traders, once they start looking at a name like this one it is trading near new highs, they start to look for a place to short the stock. I'm really just the opposite right now on this one. This one's showing strength. This one is not a short candidate. This one is one to be tracking to see at what point in a new market rally it becomes a buy candidate. Okay, so that's Kona Grill. That's an interesting one that I've taken a look at lately. Let's see here. A couple other things here. Well, let's look at Lumber Liquidators. Why not? It's I've talked about this one on the show before. This was a holding at one point, but really, as the saying goes, I'm not going to fight the tape. And I think, okay, a look at the daily chart shows you why it's a pretty futile exercise to try and fight the tape right now. This thing is just going nowhere. It's a good stock. It's holding up nicely, and I mean good stock in the sense technically that it is outperforming the general market at this point. And of course, this is the flooring store. I've noticed they have some kind of advertising marketing alliance with HGTV. A lot of their they seem to appear on that channel quite a bit. Let's see here. So that one is, I'm liking what this is doing. It made an attempt to rally earlier in this week, but just the market conditions are not really favorable despite what we're seeing out there today. Market conditions just overall in terms of the trend have not been favorable to sustained price gains in most of these stocks. I mean, you do see these move-ups, right here. A couple weeks ago, let me see, I've got this on a daily chart. So that would have been beginning back in the early part of June. So I believe that was very similar to what we were just looking at with the chart of OCZ a few minutes ago. Same sort of phenomenon right here on Lumber Liquidators. Very nice support at that 50-day moving average, but then it kind of tapered out because there's just not enough confidence among the professional traders, the investors who are out there, who are determining the direction of these stocks. And you know, it is funny. You hear a lot. Where's the individual investor? Where's the retail investor? Or the one I hate. Where's mom and pop? I mean, could you be any more condescending? It's what I hear a lot on television, the mom and pop. I just don't like the way a lot of these guys tend to say it. I guess it's not such a bad phrase, but I just don't like the way a lot of these guys tend to say it. Or the worst. What would my mother do? Well, I guess all these guys have really, really stupid mothers. But in any case, once again, I digress. Taking a look here, you know, the retail investor, don't forget, the retail investor has never, ever made up a significant percentage. Well, actually, that's not true. It's about 25-30%, but I think it's less right now of the overall market, and that varies depending on market conditions. When you do have poor market conditions, individuals historically bail out. That's not new. So it's just kind of amusing to me to hear a lot of this debate about where is the retail investor. And I understand with all the news going on right now, people don't necessarily trust the financial institutions, even though this J.P. Morgan situation is really, it's shareholder money, it's not public money, and I think the politicians may be trying to whip up some frenzy, some anti-bank frenzy. Let's don't forget it's shareholder money there. But nonetheless, there is distrust. So anyway, back to this. So you've got the institutions holding shares of Lumber Liquidators right here, kind of just holding on to it, not sending shares either up or down. That actually is good right now. That's a good technical signal in this current market condition. That's really what you want to see. That's the kind of stock that historically, when you see that kind of chart action with the institutional investors holding on to shares at a particular level, it does indicate some confidence. Let me show you one other good thing here. I've got about another minute. We can do a little more chart analysis right here. Notice what's been happening on the volume on Lumber Liquidator, and I'm on a daily chart right here. Pretty much tepid daily volume recently, kind of below average levels, as it's been kind of holding right here, just kind of, let's see here, that recent high it made was $30. Okay, so $30.81 was the high, hovering right below that, and you see volume just going nowhere right there. So that's another good sign. Some very good indications on this particular stock, and this is a consumer stock tied into the housing industry. Believe it or not, it's kind of like I said early on. People like to buy, we like to shop, we like our stuff, we like our houses to be nice, and we're seeing good earnings and revenue growth on this particular day as well. Okay, winding down this particular segment here. Be right back after this message on the Small Cap Roundup.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed, with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
All right, welcome back. Last segment of today's Small Cap Roundup. Just taking a look, we've got the major indexes. Okay, a little bit off their highs, but wow, good nice rally today. But let me put in a caveat here: lower volume. We've got let's see, some lower volume compared to yesterday's session on the NYSE and the Nasdaq, at least for this time in the trading session. So that's just to temper any unbridled enthusiasm that might be out there. Keep it in perspective. And, you know, that's I suppose that's understandable given all the uncertainty and fear, uncertainty, and doubt, the FUD factor that's out there in today's world, leading up to these eagerly anticipated Greek elections over the weekend. Monday's going to be interesting, isn't it? It's going to be interesting. So, but, you know, never a dull moment. That's the fun part about trading the markets. It's always interesting. There's always something going on. Okay, it's just about lunchtime there on the East Coast. We're still in the brunch zone out here in the Mountain Time Zone, but for those of you there on the East Coast, I have put up a chart of Papa John's, PZZA. And back when I first started doing this show, I remember we were talking about some of these pizza companies that were doing well. Papa John's is holding in there. So let me see. This is a small cap. That's always funny to me. It's, when you have these well-known companies that turn out to be much smaller than you might intuitively think. Market cap, a little over $1 billion. Thin trade, about 186,000 shares a day. And actually, just to come back to something Robert Gardner was saying, he said a lot of interesting stuff. Fascinating guy, but he made the point, which really makes a lot of sense, that, with these smaller names, Wall Street, the investment banks, they're not making a lot of money from the research or from the trading on these things. So really, they after the IPO, the initial transaction, there's not a whole lot of business they can gain from this, so you're not always going to see a lot of analysts on this stock. And we've certainly heard that before from some of these small cap managers. They will talk about the fact that they are the small caps are frequently underfollowed by Wall Street. Therefore, not necessarily drumming up. They're not out there, the investment banks are not out there drumming up investor interest in this thing the way they would be in some of their larger names. So, in any case, Papa John's, PZZA, continuing to look good there. You're seeing it on a daily chart holding up well above that 50-day moving average. I really like this chart formation that we're seeing right here. It's kind of flag-like. You know what? It really doesn't matter what kind of label you put on this thing right now. It's more important just to look at where it is relative to previous highs, relative to moving averages. And this is just showing some tremendous chart action. And, of course, those 10-week and 50-day lines are going to be moving higher. And it looks like at this juncture you're going to see good support there. This could be another pretty good buy candidate ahead. Double-digit earnings growth expected in the next couple of years. Let me just compare this. I've got a few seconds left here. We're winding down the show. But if you remember, this is one that was doing well, a tiny company that was doing well a few months back when I started the show, called Pizza Inn. And folks, this is why you don't ever want to hang on to any of these things. You want to trade them when they begin to show sell signals. Let me put this up on a weekly chart, daily chart very quickly. It sliced its 50-day line. That would have been a signal to get out of this thing because it was only downhill from there. Okay, this hour flew by. I can't believe it's over. And that's it for me for the week. I will be back here on Tuesday. Don't forget to check out the Low Price Leaders newsletter and the Tiger Dollar promotion on TFNN.com. And I will be back here on Tuesday with another edition.
Are you